Brand Capital, which is the venture arm of Times of India Group, did almost $100 million worth of investments. I was part of the team there. I was also head of treasury at MTS India, that is the Russian company Systema's India unit, and raised almost $2.5 billion of funding for the company, and was CFO with Distribution Logistics. That's a company owned by Guggenheim Partners. In my last 6 to 7 years, I'm an investor. I assist venture capital funds, angel investors, private equity funds globally from Singapore, Dubai, Middle East, other places, the US, UK, and we guide investments into companies. We do investments in both technology and non-technology companies. But I'll be very frank with you, a lot of our investments are technology investments into agri-tech, food tech, health tech, artificial intelligence, machine learning, also deep tech and any kind of disruptive tech. Space tech is also there. So I'll take you through a presentation and then, would be happy to answer any of your questions. So this is my company, Consultancy Ventures. It's a business advisory firm on debt, equity, mergers and acquisitions, and any kind of business consulting. And we also manage a angel fund called Saffron First, which is a network of 38 high net worth individuals. Coming to the next slide. This is about myself, as I just explained, so I'll just skip this. This is the angel network. We have the owner of Business World. We have Mr. Rohit Bhatyani, who's helped Reliance Retail set up their retail business in India. We have Mr. Yogesh Gandhi, who created $300 million business in last 6 years for the Japanese brand ASICS. And we have others like Mr. Jindal, Rajesh Jindal, who's finance director with Amazon India. And all these details I can share. All of you are welcome to reach me through LinkedIn. I am on LinkedIn at Tushar Kansal. That's my name given here. And my company, Consultancy Ventures. Now, just to start off, what is the economic scenario, global scenario, and Indian scenario as on date? With COVID, a lot of contraction in GDP happened, gross domestic product. GDP consists of three factors. One is investments, one is consumption, and one is exports. So exports were hit because the international trade was hit. Consumption was hit because people earnings were affected. So supply was hit, demand was hit. And also investments were hit because it was difficult to keep on working on investment projects. So the GDP was hit. If you look at the GDP contraction of different countries, it was between 10 to 20%. A lot of it is recovering now, but the vaccine is now out in selectively, and it'll take some time to recover. What is happening on a macro basis? If you look at the dot-com boom and bust of 1999, and then you look at 2008, the Lehman Brothers crisis, and then you look at COVID 2020, the pandemic, technology is marching on. Whether it is products or services, all kinds of technology is reaching our homes. The smartphone has become so sticky that services are available on the smartphone itself. So, Uber came out with a platform and solved the problem of, unable to find taxis. And then Airbnb came, which solved the problem of less costly accommodation, and their rating system is very good. So finding quality accommodation, and so technology is marching on. International trade, which was an upswing, has now changed, and a lot of economies are turning protectionist. So they are creating barriers for foreign companies to do business in their country. If you look at Asian region, India is the most open economy. Our foreign direct investment regime is very light, and a lot of foreign companies do a lot of big business. To give you an example, uh, in our country, Facebook, Twitter, LinkedIn, they are Amazon, Google, all the fangs. These companies are called fangs in the West. These companies command a lot of market share in India. But if you look at China, they have their own countries, like their own companies, like Baidu and Alibaba, and so on. Now, what is happening is that because of the contraction in economies in the West and in India and in the Asian region, countries are printing money. So $12 trillion was printed by countries and their central banks, and this money it was printed so that the economies don't crash. But a lot of this money is going into speculation, into the stock market. People are sitting at home with the advent of Zerodha in India and Robinhood, the app in the West. It is very easy to trade stocks. And because of that, a lot of money is flowing in the stock market. There is so much money in the stock market that the prices of stocks which are there right now, it is divorced from the actual ground reality. To give you an example, Tesla manufactures 5 million cars. It made its first profit ever in its history only 1 or 2 quarters back. And its market capitalization is $900 billion. Why? Because people are sitting at home, they are trading in stocks, they don't have work to do. But in the West and even in India, people are getting money in their bank accounts because of government help and support, and they are using that to speculate in stocks. Um, and matter of fact, the Western economies used to be very strong in manufacturing, but after 1980, 80 to 1990, the whole manufacturing has shifted to China, India, ASEAN countries, Southeast Asia, and these countries, their economies is dependent on two things. The Western countries' economies are dependent on investment. They guide investments. They print lot of dollars. Dollar is the global currency for trade, and that money they invest across the globe. But because it's a dollar and it's their own country's money, it gets mostly invested in Nasdaq and New York Stock Exchange, and in their own country. So these they have a very strong financial sector. The other part is they are very strong in technology. Just like Bangalore, Silicon Valley has the maximum innovative ecosystem, and all that money gets flushed throughout the world and gets invested in different kind of startups. In India, per se, the startup scene is very strong. If you look at number of startups registered with Startup India, it in the last 1 month itself, 4,000 new startups got listed. And even if you look at agri-tech space, there were 450 startups and almost 150 new startups opened in the last 2 to 3 months. So the startup system is very strong in India. Elevation Capital recently raised a $400 million fund. Fireside Ventures, which is a consumer fund, recently closed a $118 million fund, and Jungle Ventures closed recently around 4 months back. So all this money is available. Me and my company, we are closely networked with almost 230 investors. These are global investors, and we guide these investments into different startup ecosystem startups. Now on the ecosystem, uh, I would recommend all those who want to create technology companies, create your own intellectual property, your own IP. Intellectual property allows you to maintain control over your technology, and it is a foolproof method that anybody else won't be able to cheat your technology. So that is a big part of the ecosystem. Now, recently, what is happening is that wherever businesses they find a challenge in India, what they do is they find a way out. Like if there is difficulty in the legal system in India because court cases take a lot of time, so companies have started putting in arbitration clauses. Singapore and UK panel arbitration clauses in the agreements. So if there is difficulty in ease of business, so companies have started opening holding companies in Singapore and outside places. So customer is here, business is here, uh, all the techies, they are developing these beautiful technologies here, but the benefit is being taken by outside companies, by MNCs. So this is what Naukri's promoter also pointed out in recent times, that we have to create our own intellectual property, we have to create our own value of companies, our own stock market darlings in India. So this is what the startup ecosystem is doing very nicely. As you know, the government has recently changed labor laws and made them very easy for companies. New farm laws have come in, and India has jumped almost 50 places in the ease of business. A lot of businesses, especially small businesses, are affected by the lockdown and COVID. But you look at the flip side of it. My kids, they study in a convent school. They were very averse to using technology. Even the most conservative of schools are forced now to use technology. Even the most conservative of companies who said we will never give work from home, they are using technology. So technology adoption has increased, and that is the opportunity for new startups to get investment, get a lot of market share, because people's behaviors have changed. We are adopting technology like nothing else, and this augurs very well for the startup ecosystem. So Sanaya, you would like to ask the next question, or how do we?
Yes, sir. So my question is, can you tell us more about your journey and how you became the go-to investment ecosystem guy in this global investment ecosystem?
So I started out by uh, by learning a lot in corporates like Deloitte and Touche, like Brand Capital. But all along, I used to read a lot. I used to talk a lot to people across the board, whether it is marketing, product guys, whether it is R&D, whether it is the top management. I used to maintain very healthy communication, and I used to write a lot of blogs. So it's because of that that my knowledge on these aspects was always very good. But having said that, when I created my own companies, Consultancy Ventures and Saffron First, I faced challenges. And even in the corporate side, I used to face a lot of challenges. But one has to just dust off all the challenge, start again, and hit the road. And I will suggest everyone who's here today, make use of networking. Make use of networking. Have a good internet presence. You the top 10 or 20 Google results, when somebody searches your name, there should be good articles. There should be something about you, about some blogs, some videos, and your website should be self descriptive. And if you do all these things, it will really help you in your career. And always remember that now it is not the time to get degrees and certificates. The time is to skill yourself. Technology keeps on changing, and all the content in education is available on Coursera, Khan Academy, edX, Unacademy, and everything is available in simple videos. You just have to give it time and skill yourself. Keep on skilling yourself, and there is nothing which prevents you from achieving lots of success. Sanaya?
Thank you so much, sir, for that answer. So my
Thank you.
next so my next question is, how is international macroeconomic climate look after 9 months of COVID?
So international climate is that there was a GDP contraction, a lot of jobs got lost, but things are picking up now, especially since the vaccines are around the corner. People are waiting and watching as to the efficacy of the vaccines. But the good part is that the Indian vaccines, even the Lancet journal, which is the go-to medical journal globally, has acknowledged that Indian vaccine is top. It's there on the top. So, I foresee that within this year, a lot of economy will bounce back, and a lot of changes have happened. So, after the farm laws were brought, the new farm laws, we are seeing a boom in agri-tech companies after the monopoly of ISRO, which is the Indian government's space agency, that was taken away. The monopoly was taken away. We are seeing a boom in space tech. Look at Geo. Geo came in. The prices of data on mobile dropped by more than 90%. Uh, People started using data so easily, and now look what Bharti has done. Airtel, they have taken a lot big stake of 50-55% in OneWeb. OneWeb is a UK company which is sending low Earth satellites, and these satellites will beam internet. So internet will be available whether it is on a mountain, on any geography. So people are placing bets on the future. Uh, One has to stay positive. I know, sitting at home, a lot of nervous energy. It doesn't move out. So you one has to make use of things like meditation, yoga, some physical fitness at home, and keep staying positive by reading yourself, reading good things, and just believe that the economy is about to turn the corner, and a lot of businesses will come back very soon. Make use of this time by reskilling yourself, upskilling and cross skilling. So that is the way forward, Sanaya.
Thank you so much, sir. Your answers are making our knowledge more authentic. Sir,
Thank
so
you.
here comes my next question. Like, as we are seeing that so many startups are coming up every day. So, how is the economic environment for startups in India at this present moment?
The economic environment is that companies are saving cash. So all the businessmen, they are saving cash. Uh, if it is by reducing the salary across the board, or it is by saving on any kind of expansion, not doing an expansion right now. So there is a lot of investment money lying around. But you look at VC circle, look at your story. Every day 2 or 3 new investments are happening in startups. uh, जिनको काम करना है वो कर रहे हैं. Those who are positive and at it, they are at it. So it is an opportunity. Anybody wanting to create startups, this is the right time, because you have so many people available with their time to help you. Investments are there, new fund rounds are happening. And to give you an example, I work very closely with a robotic company in Gurgaon. They have 4 type of robots. Can you believe the Western company Germ Falcon, which whose robots are used in airlines for disinfection of airlines using ultraviolet rays? This Gurgaon company created better robo than Germ Falcon, and it is at 10% of the cost of Germ Falcon robots, 90% less cost, and a better customizable product. So, but having said that, this is not the time to take some risk which you don't have much understanding. So, suppose there is a business you don't understand. This is not the time to go and start experimenting. Do something which you are good at, and keep on upskilling and cross skilling yourself. And for startups, I would say build more knowledge base around your core competency. This is the time to build more knowledge base, do more research and development, and as soon as the vaccines get through the entire system, then it would be the good time to launch. Sanaya.
Definitely, sir. So, like we are seeing that so many factors affect an investment ecosystem. So, what are the present factors to watch out in 2021 that will affect in investment ecosystem?
So what will happen is that because these companies, Google, Facebook, Amazon, they have gotten too much of power. I mean, look at India's GDP, the whole output of a country like India uh, is $2.7 trillion in 1 year. Value of one company, Amazon, its business grew by 40% during the time of COVID, and its stock market value went up from $1 trillion to $2 trillion. Imagine a $1 trillion company doubling up within 1 year because its business increased by 40%. Now, if companies have that kind of power, I mean, see what Google has done. Google has mapped 5 billion people in this on this planet out of 6 billion on 700 parameters. So what happens is Google, Facebook, LinkedIn, they all have agreements with each other. Now they keep on gathering data about yourself. So if you are talking to someone on WhatsApp, you say a word lawyer. As soon as you say a word lawyer, when you next go to the internet, you will start seeing advertisements of lawyers. So they are making use of your data about where you go, how you eat, how you sit. And that is the new age business. Offer your services for free, but get get all the people to download your app. You generate data. Mukesh Ambani of Reliance, he said data is the new oil. He's moving away from oil business and coming to the geo business because of data. And the time what will happen and what is recently happening is all these global data of 5 billion people is with the US companies, Amazon, Google, and so on. And the data of Chinese companies, Chinese people is not there because China does not allow foreign companies to own their internet. So countries are now questioning these companies, and this will be an opportunity for new companies like TikTok was questioned world over. Now Chingari, look at the benefit it got. So, look at Snapchat. Snapchat operates on many Indian languages, vernacular languages, the local languages. Because of that, they have data on the people who use local languages. And that's why Google is investing $200 million in Snapchat. So, these are opportunities for people like we have Indus operating system. Our country created a whole new operating system based on local languages, Indus OS, and Geo device, the Geo phone, they adopted Indus OS. So these are the big opportunities, and my only this thing is that watch out for black swan events. Black swan events are events which nobody could predict. So there are some events like uh, uh, in the UK, a new strain of COVID has come. Like, there are some Chinese companies who have defaulted on debt, government companies in China defaulting on debt. And, in some other workshop, I'll explain more about US treasuries, how they are used to make the dollar the global currency. But there are many factors which one has to watch out for. Like even COVID was one such factor. And I can advise a lot of students here on how to keep a watch out for these factors, but stay positive. Sanaya.
Yes, sir, definitely. Thank you so much for that answer, sir. So my
Thank you.
next question is, as we know that so many startups are coming, but they do not proceed till the time they don't have the best investor. So, what are the best practices to approach investors for funding?
So, approaching investor, you have to, Adam Newman of WeWork, uh, when he thought that WeWork will be a new community style office where people will eat together, they will play together. And he got a chance to a meeting with SoftBank's, the owner of SoftBank. So the owner of SoftBank was going in a car, and from there to airport was 20 minutes. He had 20 minutes to convince the investor. Now the problem is investors are actually they are amongst you and me only, but their attention span is very limited because all are people chasing them. They get a lot of businesses, so you have to just work on it. The first thing is create some blogs, have some videos of yours on the internet, have a good website. Somebody searches your name or the business, in the first 10 results, he should get a good idea about 10 to 20 results. Second thing is make a business plan, understand how it is to make a business plan, and which has some projections, how you will make money. And a pitch deck is also required, which is usually a 14 to 15 slide document to approach the investors. Then after the WeWork debacle, where WeWork the IPO could not happen because it was making a lot of losses. So investors are now very particular about unit economics, which means that whatever business plan you have, you should not lose money on every unit you are selling. You should be earning money. You should be profitable. Secondly, make a profile on AngelList, LinkedIn. Your LinkedIn profile should be very, it should give people an idea about what you are doing, why you are doing. Then, when you are approaching investors, then you should approach them through the founders of their investee companies. If you are not able to get, through founders of investee companies, then you do a cold calling to the investor on LinkedIn. But always send a personalized invite. Sir, I am this and that. I want to connect with you. I have a startup. This is my brief background, five liner, so that the investor accepts your invite. Once you always dress well, speak well, be nice, to maintain all these manners. These are very hygiene factors. uh, so whenever you get a time with the investor, you tell him what problem you are solving. You should be solving a problem which affects human beings in a major way, just like Uber did. Anybody living in India, they know how difficult it was to find a taxi. That black and yellow taxi, it was so difficult to find. So he solved a major human problem through the use of technology. So if you are solving that kind of a fundamental problem, the investor really wants to put money in you, because he knows that this problem is faced by so many people, that this the scalability of this business will be very good. So one is scalability of business. Second is barriers to entry. You should be creating a business in which you create certain moats, certain ways by which it will be difficult for other companies to enter. Because you create a nice business, but these other companies who already have deep pockets, they can easily put in money and try to give you competition. So then you have to create certain moats. Moats is like a water around a fort, which was built so that invaders should not come. So those are the called moats. I can give you an example of a moat. Like, if you buy a Gillette razor, now the razor is costly. Because you bought a costly razor, you will keep on buying its costly blades because you don't want to throw away that razor. Now, this particular thing, that it's a costly razor, it has become a moat for Gillette. That's why people keep on using the same razor. So these are moats. There are many type of moats, like network moats and so on. uh, then uh, very important is you should know about which investor you are talking to. What is their investment thesis? It is given on the website of the investor. Read about them, what ticket size they are investing, which sector they are investing, what kind of money they have. Like, it is European pension fund money, which is very patience money, or the Indian traditional business money. Some businessmen have given them their money, which they will expect कि हमें 3 साल में वापस मिल जाए, 5 years वापस मिल जाए. थोड़ा बहुत you should definitely know about the investor, so that the investor will also give you respect and quality time. So these are the ways, and my this thing is that hold your horses. Have a lot of patience. Definitely, if you are doing something different, you are creating something nice. Scalability is there, and one I will give you a very important tip to every student. They will remember me for this. How does the foreign investor look at Indian startups? India, the biggest component of Indian GDP is not investments or exports, it is consumption. We are a very consumption driven economy. A lot of our economy is services led, like the Western economies, UK, Europe, and America, US. So we are not like a traditional economy like China or South Korea or Southeast Asian countries, which first developed their manufacturing sector, then their services sector was developed. India is मामले में it is reverse. Here first services sector got developed, IT and financial services, and manufacturing we are still trying to develop. So uh, we are very different from other countries in this regard. My only advice to you is, how does the foreign investor look at India? He sees India as a consumption economy. So all these VCs, venture capital guys, putting in money in consumer B2B and consumer B2C companies, because consumer companies are king in India. And second part, the foreign investor, they see India as a laboratory. अगर इंडिया में कोई प्रोडक्ट चल गया, such a price sensitive market, such a quality sensitive market, such a service demanding market, the Indian air hostesses and Indian stewards are the best globally. आप कोई भी एयरलाइन में चले जाओ, आपको वो सर्विस you won't find which you will find from Indian staff. So, once they see that a product achieves minimum viable product, MVP, achieves the product market fit in India, PMF, then they are so sure that this product will do well in 190, 200 other countries because it did well in India. So what they do is they create a company in India, create the intellectual property abroad in Singapore or UK or US, because the IP, intellectual property ecosystem of Singapore is number one globally. So they would like to create. Then they create a holding company, जो owning जो company at the top. They create that in Singapore, UK or US, and they keep back office staff in India and keep the top management abroad, and build all the agreements in which the arbitration panel is either Singapore or UK. So uh, consumer यहाँ का है, money यहाँ का है, effort is here, all staff is here, but the benefit is global. This is how the foreign investor looks at India. Now, if I talk about a non-Indian scenario, because we are a global company, we keep on advising global startups, and we are very close to global investors. For foreign companies like Israel, I recently have a client from Israel. He has created a beautiful blockchain app. So they have access to easy money. Any investor from the US, if you explain the business to him in simple words, in 15 minutes, 20 minutes, half an hour, they are very fine to write a check. So that's how easy. And also because dollar is very strong as compared to the rupee, so you get more money abroad when they're writing a check. And So, we help companies across Southeast Asia, Middle East, and a lot of work in Israel, because that's doing a lot of good work in technology. Sanaya?
Thank you so much, sir. That was really an intellectual, wordings from you. So, sir, here comes my next question. What are the interesting investment themes for venture capital point of view at this present moment?
So, if you look at non-technology companies, food company, like we do food investments, even big ones, we do $5 million, $25 million. Any non-technology industry in India gets private equity, which means bigger check sizes like post Series B, post Series C, very easily. Because investor sees that product is developed, land is there, building is there, manufacturing is there. So they understand ki, it's now they just need money for marketing. They need money for, building, getting the product out to the market and stuff. But, I will be very frank, non-technical businesses, early stage, getting money is difficult in India. When you look at globally, if the product is scalable, it can be non-technology. But if it is scalable, then they get money still easily. But matter of fact, nowadays, if you are not using technology, then scaling your business is very difficult. So let's talk about technology. Within technology, artificial intelligence, machine learning. Uh, there is a Cap Gemini study which came recently. They asked questions to a lot of India, China, Southeast Asia. You will be surprised to hear now companies are using technology, internet based technology, digital marketing, CRM, customer relationship management. So in that poll which Capgemini did, 79% Indians and 85% Chinese, they said that they would love to see in-store automation uh, technology also coming in a big way, and not only the technologies which are there on the internet. So I'll tell you the importance of this. There is a pharmaceutical client I have. They have a pharma, tech enabled pharma business. Now there is a pharmacy. A customer goes inside. As soon as he goes inside, the facial recognition software knows which customer it is. It shows its face, and it's then the entire family history of that person comes on the screen, and which this family has which medical health problems, which are the medicines they buy, what is the history, everything comes. Then using artificial intelligence, the system tells you that this person has not taken a health test since the last 3 months, so immediately you tell him you need a health test. Fourth, the system tells him through artificial intelligence that this person, weight and BMI, so this person should be doing these exercises. So immediately a map comes up, and the dietitian or health fitness trainer near that person's home, that name comes up, and then the person says, okay, fine, I want this medicine. Immediately a robo goes, just like the Amazon warehouse robots. He goes, fetches the medicine, gives it, automatically billing happens, and the system updates itself. This is in-store automation. And uh, all this facial recognition technology, AR, VR, wearing those virtual things, all this is going to come into India in a big way. We are working very closely with the in-store automation companies, especially in Dubai, Singapore, and India. So this is the portents of things to come. Sanaya.
Definitely. Thank you so much, sir. Sir, how do we read an investor term sheet?
So everybody here should they should know about how to read a term sheet. An investor, when he decides to make an investment, he issues you a term sheet. A term sheet means that there are, all the terms and conditions by which the investor will put in money is written there. The first thing is what is the amount he will put in. Secondly, whether he will put in money by taking shares straight away, or that there are some other options also with the investor, which are called preference shares and debentures. Now, those preference shares and debentures, they can be convertible, non-convertible. One very important factor is the term sheet can be binding term sheet or a non-binding term sheet. A binding term sheet means that term sheet is issued, then the investor does due diligence of the company, then the report comes of due diligence. If there are certain factors in due diligence which affect the price, then the investor changes the price and then he signs off. A non-binding term sheet means even on the last day of signing the shareholder agreement, the investor can walk away from the deal. Then there are in the term sheet ESOPs, employee stock option plans. Now, the it startups find it difficult to match market salaries, so they give some money in salary and some ESOPs, which are shares in the company. But these ESOPs, they have vesting years, so some get vested in 1 year, 2 year, 3 years. You keep on working for the company, you get ESOPs. And whenever the next funding round happens in the company, new investor comes in, the company gives you a right to sell those ESOPs. In many cases, the company also buys back the ESOPs, so they give you an exit. Then there are certain if the investor is coming, what rights he has. It can be like a seat on the board of directors or an observer right on the board of directors. How many voting rights the investor has on the board of directors. Then he has information rights. He has a right to ask information from you. What is the quarterly balance sheet, semi-annual balance sheet, yearly balance sheet, and so those info rights. Then exits. How will you give it exit to the investor? Today he's putting in money. Later on he wants to get an exit. So in the term sheet there are 4 5 exits which are mentioned. The first exit is you will come out with an IPO, say within 5 years. If you are not able to come out with an IPO, then the second option is that you will get a third investor and which will buy the shares of the existing investor. If that option is not possible, then the company will buy back the shares from the investor at by giving him a particular IRR, internal rate of return. Fourth option is if the company is not able to give exit to the investor, then the founder will give an exit to the investor by buying his shares. And then there are fancy terms which are used in foreign term sheets like investor commitment, founder vesting, like liquidation preference. Liquidation preference means it is a sweetener for the investor. आप पैसा डालो, आपको जो हमने प्रेफरेंस शेयर दिए हैं उस पे हम ज्यादा रिटर्न देंगे जब नेक्स्ट इन्वेस्टर आएगा तो. These kind of things. One very important clause is drag along. Drag along, tag along, and right of first refusal. Right of first refusal means whenever the next funding will happen, the first investor will have a right to buy shares in the new round. Tag along means if the founder is selling his shares to an investor, then the first investor has a right to sell his shares also along with the founder shares, tagging along with the founder. Drag along. Drag along means that suppose the investor has 25% equity. Now he's getting a buyer of 51% equity. So 25 he already has, he needs 26%. So drag along clause means that the investor can drag along 26% of the founder's equity if the founder is fine with the price, and then sell a total of 51% to the new investor. So these are some standard clauses in a term sheet. Sanaya.
Thank you so much, sir. It was really an intellectual answer. So
Thank you.
we are open to audience questions. So my
Sure.
first question is, I would like to know how you keep yourself updated about all these technologies. For example, about Bharti Airtel and their new idea of introducing a new kind of satellite. Simple reading newspaper can't make such knowledge, right? Do you read any magazine or to find these informations? Also, please recommend author books that are good for stock marketing.
Okay. Uh, I used to read a lot. I mean, I used to like, there was a point where I had read 600 books in the matter of 3, 4 years. But, the point is not that. The point is, all information in today's time is available on the internet. Medium.com blogs are quite good, I've seen. So, if you have an interest, suppose I have an interest in in-store automation, or I have an interest in quantum computing, then, if I keep on searching articles through Google, I will get the very good blogs which I can subscribe to. Like on financial matters, I have subscribed to a blog of FinShots. So I get an update every morning, an email update from FinShots, FINSHOTS, FinShots. So these are the ways, medium.com blogs are quite good. Now, when you talk about stock market books, then I would recommend that you read the book Coffee Can Investing by Saurabh Mukherjee, Coffee Can Investing. It's an amazing book. Saurabh Mukherjee owns Marcellus Investing, and I keep on reading. I used to keep on reading his articles, and then I read his book. Then, you should definitely read, Warren Buffett, Berkshire Hathaway. You should read his book, Letter to Shareholders. Uh, he writes letters to shareholders every year, and all those letters are compiled in a book called Berkshire Hathaway Letter to Shareholders. And on the personal side, I would recommend some spiritual books for, because people are sitting at home, so it is a good time to spiritually update yourself. You can read Bhagavad Gita for All by D.M. Sinha. He has explained Bhagavad Gita in very simple words. Or you can read a book, Dying to Be Me by Anita Murjani. Dying to Be Me. She has explained, live your life fully, with so much of love. So, and also there is a new book by David Epstein called Range, How Generalists Triumph in a Specialized World. यानी अगर आपको धंधा करना है तो आपको प्रोडक्शन भी पता होना चाहिए, मार्केटिंग, फाइनेंस, सब चीजें पता होनी चाहिए, टेक्नोलॉजी, HR. So, you have to be a generalist and not a specialist. So this book, David Epstein, Range, this book is very nice. It tells you to be a journalist, and how generalists are triumphing in today's world. Sanaya.
Yes, sir. My next question is, how much do you consider the significance of traditional college education and degrees? Are they still of the same worth?
So I'm sorry to say, I don't want to demotivate anybody, but you tell me something. You are working on a machine. Suppose you are a textile engineer. You are working on a machine which has computers in it, and you work on it for 2, 3 months, and you understand it fully. Would that give you more joy? Or would mugging the definition of what a machine is, what textile is, would that give you more joy? See, we are not for books. The books are for us. If we are able to utilize a content in a book to solve a practical problem, that is what books are made of. It is not the other way around. So there is no crown which we get by getting these certifications and this. But if we are doing it for the love of it, that I today know what quantum computing is, to the extent that I just love it, and whatever I read, I'm able to understand it, and I can explain it to any other person in 5, 10, 15 minutes. If you can explain a thing to other person in 15 minutes, it means you really understand that. So my parameters is not about degrees and this thing, skills. Make yourself skilled, upskill yourself, cross skill yourself. कुछ आपको आना चाहिए. आपको आता है, you are the king in today's world. Sanaya?
Yes, sir. So my next question is, how do e-commerce company which do not have seller, they first buy and then sell requires investment every year. So how did these companies get investment every year?
So it's like, you take $1 million, then you create a business, you get sellers, you get customers, right? Now your platform has customers. Because of that, sellers start coming in. And when sellers start coming in, because that platform has sellers, a lot of customers, it becomes a go to platform. Once it becomes a go-to platform, it starts getting viral every day. It grows exponentially. When it grows exponentially, it becomes a monopoly platform. Like किसी को धंधा करना है e-commerce में, they can't, they have to be on that platform. But I'll give it is a lot of credit to Jeff Bezos, Amazon. 99 के बाद he had raised 100, I think $100 million he had raised from the stock market in 99 to 2000. When the bust happened, a lot of people told him internet is gone, forget internet, you put your money in some other thing. He just kept on investing that money in new warehouses, new markets, getting into new countries, new products. Like from books he went to other products. He had the faith that in the future people will want his services, they will want products to be delivered at home. That is the kind of faith he had. It is because of that faith that, in spite of making losses till 2014, Amazon ने 20 साल तक लॉस बनाया है. But the reason for loss is because he was investing his earnings into new capacity. जो भी कमा रहा था उसको expand करने में लगा रहा था, उसलिए that's why losses were coming. And the investor understood. Today I am investing in a company which has 5% market share. Now, 5 years after that, the company is still in losses, but they have 10% market share. Now, will I like the company or will I not like the? I will like the company because he has increased his market share. And so today, because all the sellers are there on Amazon, because all the buyers are there, it has become a go-to platform. You can't do away with it if you want to set up a e-commerce thing. So that's how investors keep on putting in money, because the platform becomes a monopoly, and nobody can escape that. Sanaya?
Definitely, sir. So my next question is, what advice would you give to a young stock trader and investor that can improve his skills?
Stock market. Stock market is, Warren Buffett, the number one investor. He had a deal with a hedge fund guy. Hedge fund वाले ने उसको बोला, I can generate better returns than lot of market players. So he placed a bet. उन दोनों की एक bet हो गई आपस में. Warren Buffett said, I will put $10,000 in an index fund. Index fund मतलब सेंसेक्स ऊपर जाएगा तो इंडेक्स फंड ऊपर जाएगा. इसमें कोई रॉकेट साइंस नहीं है. देयर इज नो माइंड टू बी पुट. यू जस्ट पुट मनी इन इंडेक्स फंड, and gave the same amount of money to the hedge fund guy. Now, over a period of 4 years, 5 years, the hedge fund guy could not beat the index fund. So, there is a lot of value which we give to smart traders, but market is the king. You can't, you are as smart as the market is. Now, my advice to stock market guys is, those who want to make a career in stock market, यूज फंडामेंटल्स टू इन्वेस्ट. एक कंपनी को स्टडी करो, गो ऑन द कॉन कॉल्स, जो इन्वेस्टर कॉन कॉल्स होती हैं, CFO इज देयर, CEO इज देयर, दे आर एक्सप्लेनिंग देयर बिजनेस. Go on those con calls, ask tough questions. You should really know how to read the balance sheet of the company. Uh, Develop your skills in particular sectors. Don't become a jack of all. You choose your sector. And once you become skillful about that sector, you understand that sector, surely you will do well in that sector. And use fundamentals for investing. Don't don't put bets, don't make it a satta. Don't make it a satta. You invest for long years, 5 years, 4 years, 10 years. Invest for the long term, invest on fundamentals, understand the balance sheet, understand the sector, then you will have success in this field. There is a
Yes.
guy I would like to recommend. His name is Sameer Arora. Sameer Arora, he based in Singapore. He keeps on giving interviews for Indian media. I love that investor. And Manish Chokhani. Manish Chokhani, and there is one Shah also. Sameer Arora, Manish Chokhani, and Junjunwala is there. Rakesh Junjunwala. But this guy is very smart. Nilesh Shah I love. Sameer Arora I love. Manish Chokani, Rakesh Junjunwala. These are the four amazing guys.
Thank you so much, sir, for that answer. And
Thank you.
definitely, we are going to follow the people you recommended.
Thank you.
So, my next question is how to decide how much money we can ask to invest from investors for 5 to 10% of shares for a tech startup which is going to generate 3 lakh revenue from its first month of marketing share.
Uh, so my advice is 3 lakhs per month revenue means 36 lakhs. So even if you take 10 times, I'm just using, it depends on the sector. Like pharma, the valuation is going 10 times revenue. In the traditional sectors, it is not going that much. But, I'm just doing ballpark figures. Then I will give you a non-traditional answer also. On a basis of ballpark, uh, you can raise 1 crore by diluting between 16 to 24%. You can raise 1 crore on 36 lakhs turnover by diluting 16 to 24%. But if you make your turnover 1 crore or 1.5 crores, then you will benefit a lot. You can raise 1 crore by diluting 10%. Your valuation will be 10 crores. So instead of diluting at 36 lakhs turnover, you should dilute at 1 crore or 1.5 crore turnover. That will be better for you. One should dilute, only when the revenues are healthy, so that the valuation has a justification. If the revenues are not there, then the justification is not there. But I will also tell you to build relationships with angel investors. हर टाइप के इन्वेस्टर्स हैं. I will tell you one thing. There is a company which came to me from Delhi. उन लोगों ने 7% dilute, they had done dilution for 60 lakh rupees at initial stage. Exactly similar company had come to me from Bangalore. They had diluted 36% for 36 lakhs. यानी एक कंपनी की वैल्यू 9-10 करोड़ लगी हुई थी, एक कंपनी की वैल्यू 1 करोड़ लगी हुई थी. सो प्री रेवेन्यू में देयर इज नो justification. It is very fungible. It depends on your relationship with the angel investor and how you are able to convince him. But having said that, I will recommend, instead of diluting at 36 lakhs turnover, you should dilute at 1.5 crore turnover. Then you can get 1 crore for 10%.
Definitely,
Satya?
sir. Yes, sir. So, my last question is from Bhavya Jain. If we are going to initiate a startup, so we should try to reach to Indian investor or foreign.
No, there is no Indian and foreign nowadays. It's all a common market. ये elevation का जो 400 million का fund है, all this money is global money. Naspers Gurgaon is there. They are a South African investor. And this Fireside 118 million, it is all. Then this Jungle Ventures, $50 million they have raised from a German institution. So all this money is very, there is no color of money. The Chinese Mao used to say, Deng Xiaoping used to say, money does not have a color. So I'm not saying you take money from underworld, but I'm saying that if you are taking it from a venture capital fund or an investment vehicle, then don't go by whether it is Indian or foreign. It doesn't matter. And but it's just that if you are taking it from a foreign investor, then they put bigger checks for the same equity dilution. So 10% India mein dilute karoge, you might get less money. 10% globally dilute karoge, US mein you will get more money. This is on a ballpark basis. It's not a formula. I'm just telling basis my experience. So that's how it is.
Thank you, sir. So the way you explained everything gave us the clear view of economy and everything about equity investment. And so we also want to know that how we should improve our network.
Networking is LinkedIn is the king, and you approach people on LinkedIn. You see those their post. What people there is a fashion in India not to have mentors, but you have some mentors. Keep on connecting on LinkedIn and keep on going to events. Say hello, pass your visiting card, just to say hello, chit chat. Then I would say networking is something which one should always keep on doing, just throughout life. Keep on doing, and don't restrict yourself that I will network only with Indians. I will not network with Chinese. I mean, networking is an open thing. You network basis what the other person is doing, what value he can add in your life, and what value you can add in their life. And if you are a part of startup communities like W Hub, Founders Institute, like there are many in India also, like Faster Capital has these events. And so, there is CFO events, there are so many events happening. Just keep on going, try to mingle with people, with speakers on I am always available on LinkedIn. Tushar Kansal, my company is Consultancy Ventures, available on LinkedIn. Uh, Happy to, anybody wants up to $0.5 million, $1 million, $5 million, $25 million. I'll be happy to get you your money, and also happy to help youngsters whenever they need help from me. Sanaya.
Definitely. Thank you so much, sir. Sir, it was really an insightful session as we have just wrap up with the questions. So,
Okay.
if any of the audience questions are left, and you can completely reach to Sir's LinkedIn profile as we have shared in the chat box, and you can definitely let him know what all questions you have. He will definitely resolve it.
Sure. I'll be happy to answer. Even if you don't have questions, just say hello on LinkedIn. I'll love to say hello. And we can meet over a coffee sometime. And if I can help you whichever way, always feel free to reach me. Any one of you wanting to open startups or have startups who need funding or mergers and acquisitions or debt or any such advice, I'm always available.
Thank you so much, sir. It was really an insightful session, and we have learned so much from all the intellectual ideas and knowledge which you provided today. I
Thank you.
want
It's my
to
pleasure. I was looking forward to come on MFL Edu Club. I just love the way you guys work. And thank you so much, Sanaya and Nitish and Ayush and Pramit and the whole team at MFL Edu Club. And thank you, all of you, for coming today and giving me your valuable time to listen to me.
thank you so much, sir. And I want to really thank my audience uh, who just waited and patiently listened all the thoughts and ideas that sir provided. Thank you so much, and please do fill the feedback form that is in the chat box, guys. We really need the feedbacks, and definitely, so we'll organize much more sessions with you like this.
My pleasure. Thank you so much. Have a good
Thank you
day.
so
Have a
much,
good day
sir.
ahead.
Same to you.
Thanks. Bye.
Bye, sir.